Hi, today we'll be seeing amongst the banks, private sector banks, how it got formed, what is the Narasimham Committee recommendation saying on that, what is the capital infusion required, and along with that, what is the percentile of foreign stake in these kinds of banks. Along with that, we will see universal bank, what it is about, and foreign banks in India. So these three main sectors we will see in this video today. After the nationalization in the year 1969 and 1980, Narasimham Committee has been formed, and it was felt that there is a need for niche bank with proper computerized environment, having proper control on lending, and systemized banking channels in comparison to the banks that work abroad. So, reducing the manual registers is the main criteria, and these kind of banks are formed with fully computerized environment with ATM network. The idea is slowly shifting from brick and mortar type of bank to the bank which is on digital mode. So this was the idea behind formation of these kind of banks. Earlier, the total net worth that was expected to be was 100 crore when it was formed in the year 1993-94. Slowly in 2005, the net worth was increased to the tune of rupees 300 crore. So what are the major guidelines in this is, in excess of 10% of paid up capital by any single entity should not be there in these kind of private sector banks. Then large industrial houses are allowed to acquire by way of strategic investment, and again in this, shareholding should not exceed 10%. So that the vested interest will not be there in these kind of banks from that industry. Directors representing specific sectors should not be part of it and should not be from the same family. Aggregate foreign investment in private sector banks cannot exceed 74% of the paid up capital. So these were the few stipulations that was given by Reserve Bank of India when these kind of new generation private sector banks got started. What are the broad principles to have these kind of banks? The ultimate ownership and control will be with the private sector, and it is well diversified. When rupee 100 is being disbursed, certain percentage will go to agri sector, certain percentage, anyway, priority sector lending will be 18% as per the norms of Reserve Bank of India. Apart from that, apart from your CRR and SLR, the remaining portion was apportioned towards certain percentage to each industries, like cement industry this much percentage, pharma industry this much percentage, iron and steel industry this much percentage. So real estate was exposed to certain percentage. Beyond that, if the percentage proposal comes in for that financial year, it got pushed to the next financial year for accommodating those kind of proposals that comes to the bank. So as I told earlier, these kind of banks came with totally computerized, and all the branches are networked, and hence the concept of anywhere banking came in, and each check had the defined parameter on the top that payable at par at all branches in India. So this was the parameter that got into these kind of banks which came into existence in India. So what are those kind of banks that came into India? IDBI, ICICI, then UTI. So these were all the term lending institutions that formed banks in India. And when ICICI, in fact IDBI bank was absorbed by IDBI, so that was a merger, whereas ICICI was absorbed by ICICI bank, that was a reverse merger. So I hope the concept is very clear. IDBI bank was absorbed by IDBI, and it became public sector, and hence it is IDBI. It has become an entity called IDBI Bank, where the parent absorbed the offspring. In the ICICI Bank's case, ICICI Bank absorbed ICICI. So these two have become universal banks. So this is called universal bank. So universal bank is a bank that not defined by any legislation. Banking business of multifarious nature. So that is a advantage of this. ICICI Bank and IDBI were originally set up as development financial institutions mainly to perform term lendings and related activities. So ICICI Bank Limited. So what are the various? Why is it called universal banking? It is into retail banking and small and medium enterprises also there. Wholesale banking is there. Project finance also is being handled. International banking is there. Rural and inclusive banking is there, and treasury is also there. And hence this is called universal banking. Then in the case of IDBI Bank, it has retail finance, corporate finance, infrastructure finance, agricultural microfinance, and treasury operations. And hence these two banks have become the universal bank in India. So foreign stakeholding in these kind of banks. So in the order of, say, ICICI Bank had 70% foreign stakeholder holding, HDFC Bank had 63% foreign stakeholding, Axis Bank had 41.7% foreign stakeholding. This is in the year of 2012. ING Vysya and Federal Bank, this is called old generation private sector banks. Even these banks had foreign stakeholdings in their net worth. So then what is a foreign bank? Foreign bank means having branches in India, whereas the corporate office is registered abroad. So this is foreign bank. We have close to 41 banks in India as of 31st March 2012. These banks also do the similar type of functions which a private sector bank or public sector bank is undertaking in India. So they have a limited number of branches in India, but then the operations are controlled by Reserve Bank of India. So we have seen in today's video detail about private sector banks, how it got formed after Narasimham Committee recommendations. Then we had discussed about universal bank, and we have also seen about foreign stakeholding in these kind of banks, and finally foreign banks in India, meaning banks registered office abroad, branches in India. There are 41 of foreign banks which is functioning in India, doing so much of banking operations, retail as well as corporate and treasury operations. In the next video, we will see more about regional rural bank and cooperative banks which is existing in India. So in the previous video, we have seen overall view of financial system in India. In this video, we have seen more importance to private sector banks, universal banks, stake of foreign stake in these kind of banks, and foreign banks. Coming videos, we will see about regional rural banks and cooperative banks. So these are the three various sectors that is the backbone of Indian financial system in India. So thank you very much for patiently watching. As usual, keep supporting and then view my videos. Share it to the students who undertake banking and the commerce, graduation, post graduations. Bye.